If you have questions, concerns, and are just lost when it comes to planning for retirement, meet Steve Hoyle and Derrick Caldwell of the Hoyle Financial Group. You know, it's estimated that 1 in 10 people getting divorced today are 65 or older, and the costs are steep. A recent study says a man can expect his standard of living will decline by 21% after the divorce, and a woman's standard of living will plunge by 45%. Both will see their wealth decline by half. So when clients come in saying that they plan to divorce, what are some common issues that you tend to help with?
Total replanning. I'll tell everybody listening, it better be worth it. You heard what Jess said there, 21% for males, 45% for females. And most people have to start over. You know, state of Texas is a community property state. So no matter what, half your money is going towards your ex. Mm-hmm. So, you know, if you have $1 million in that 401k that you're planning to rely on, well, now you have $500,000. So the catch up is quite extensive, and there's a lot of things you can do to recover from that given sufficient time. But you got to start with a whole new plan. You know, we basically scratch everything in half, and we also talk about further things like kids, grandkids, things like that you have to, maybe you were the breadwinner in the family, mm-hmm. and now all of the, you know, college fund is on you versus, you know, your wife participating in some of that as well, or husband. So there's a lot of factors that go into that, and you have to do proper planning and get that done. But yeah, it's heavy. It's hard. And I'm actually surprised just by that 1 in 10 people over 65. You know, me and my wife have been married for 17 years. I'm 40 years old. She's stuck with me.
That's what I'm thinking. 65 or older, don't you think you'd be like, listen, we'll figure something out. But going through the whole divorce is way too much money and time and effort. But, you know, some people go through it. And when they do, as this says, just be prepared for your wealth to decline by half for both parties. Steve, you see this a lot. Talk to me.
I think the big thing is, Jess, is people work all the time. They're never home. They never see each other. And all of a sudden they both retire and they both think, we can't stand each other. I mean, I think it happens so much. People change and all of a sudden they have to get to know who that person is again. And I think that it's really, really tough. And I think the one thing that I see after 35 years when people getting divorced when they're older like that is they're like, well, I found this woman or I found this man and they're going to take care of me. Absolutely not. Mm-hmm. You need to plan based on your money, what you have, and make it work. You can't count on that. And I think a lot of people are very unrealistic about the grass is always greener on the other side. So I mean, I just tell people, you got to do what you got to do. But like Derrick says, you got to start over. I think the other thing is people don't realize is you got to make sure you were married 10 years to get the Social Security of your spouse. So I think that 10-year rule, you know, if it's 8 years, you need 2 more years. You just need to ride the ride. I mean, I think some of those details are really important. I mean, you see people in second marriages get married and you know, after a while, oh my God, I'm back to those same set of problems. So I'm not here to do counseling about divorce or marriage, but I'm going to tell you something, Derrick, we see it so often, you know, it really is true. And I mean, people come to tell us and go, I can't stand my spouse. Well, we're here to talk about your money today. You know, we're not Dr. Ruth or anything like that. You know, it's seriously though, it's a huge problem in our society. But if you plan and you plan well and you do that, you can make it work. I mean, you just have to be willing to adjust that. I think while we're talking about that too, Derrick, we need to talk about being widowed. I mean, we see it so often that you look at a couple and one of them makes all the decisions and one of them doesn't make a lot of decisions, and then they lose that person either mentally through Alzheimer's, incapacitated, or widowed. They can't make a decision because that person's not there to nod their head. So I really think that a lot of people just that are big in the market, taking a lot of risk, come to see us and say, the one that's the risk taker, if something happened to him, we need you. We need to have a safe strategy to make sure we don't get wiped out. So I think that a lot of people, as they get older, come see us because they want us to do the heavy lifting. We sit down, we put the plan together, we have it all worked out, but then they have a track to run on. And they're not worried about the market all the time. So I think you need growth in the market, absolutely. But I also think you need safe money. But when we talk about divorce, as we talk about being widowed, Social Security, income planning, estate planning, tax planning, they can make the biggest difference in the next 20 years. Call us at Hoyle. Let us really help you figure it out. If you're thinking about getting divorced, I think you really need to sit down and make a consultation and see what those numbers are going to look like. We've had people come to see us that want to get a divorce. When they realize how bad it is, you know what? I'm not so miserable at home. And I mean, I don't mean that in a laughing manner either. I really mean it seriously. Derrick, 6 years ago, we had a couple come to see us that wanted to get a divorce, and we sat down with them and worked through the details of how they could make it work. And I mean, it was a really neat process. And they're great friends. They just don't want to live together, so they divorced. But you know what? We really made a difference in their financial future.
Well, and Steve, it's funny you say that because I know when I say this, you'll know who I'm talking about. But we have clients that have been with Steve for 20-something years, and kind of the reverse happened. They were thinking about getting a divorce, and so we met with each one of them individually and told them the economic impact of what they're going to do. And that was 8 years or so ago, Steve,
right.
And they were still married today.
Right.
Yeah. And, there's a lot that goes into that. And I will remember this the day I die. This is back when I worked for Bank of America at a bank. And I had a guy tell me, he's like, man, I know I don't have a lot of money and I'm trying to rebuild. He said, but when you take half 3 times, Derrick, there's not a lot left over.
Gosh.
Yeah. He was on his third divorce.
Marriage. Third divorce.
Yeah. So, it's tough. And, one thing that they don't talk about, too, is health care. A lot of times, if you have a married couple, you're on their health plan or vice versa. You get a divorce, all of a sudden, you're having higher health care costs, whether you're still working or, you're not working. There's a lot of factors that go in, including health care, long-term care. Maybe you're relying on a long-term care policy that you had tied to your husband. Well, you're now divorced. Now you have no long-term care, or you're relying on his assets, to do long-term care. Well, now they're cut in half, and you have some, but they can't create the kind of retirement you want. So there's a lot of factors, Steve, like you said, that go into this. So it really boils down to talking with somebody and sitting down with you.
If you're divorced or going through a divorce or really want to explore what the divorce difference is, but I also think if you're widowed or worried about being widowed, how the steps you could take as well to make a difference. It all starts with proper planning.
If you'd like to sit down with Steve and Derrick or a member of the Hoyle Financial Group, visit retiretexasstyle.com.
Hoyle Financial is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and/or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. Bonus annuities may include higher surrender charges, longer surrender charge periods, lower caps, higher spreads, or other restrictions that are not included in similar annuities that do not offer a premium bonus feature. Read your contract for restrictions, limitations, or penalties. By contacting us, you may be provided with information about insurance and annuity products offered through Hoyle Financial Group, Texas Insurance Licensed 1719183.